Good evening, students. I hope you're all doing well. I'm getting a lot of wishes. Himanshu, Mukta, Almas, Yogita. Good evening to all of you. I hope you enjoyed our day one class on chapter number 2, Financial and Accounting Systems. So before get started, just confirm if you're able to view my screen, audio, everything is fine. Again, there is a standard disclaimer which I would like to mention. As I said in day one class, today also I will try to demonstrate in some of the concepts directly logging into the one of the ERP application. So whoever viewing the classes from the mobile, you might experience like clarity issues. You have to, there is no other option from our side which we can help you out. You have to see it on the desktop or a computer so that it will be visible on a bigger screen. At least you will be able to view the what I'm displaying on the screen. So whoever viewing from the mobile devices, there will be issue whenever I'm showing that application. Okay. So without much further delay, let's get started with day 2 on chapter number 2, Financial and Accounting Systems. So in day 1, there are certain topics left. So we will start from there. But before starting, I will give you a quick recap of what we have discussed in day 1 and complete the remaining topics from day 1. And then we will get into day 2. Day 2 is more of, we are directly getting into the ERP application. Actually, good or bad, we concluded very logically in day 1, which gives the foundation for day 2. So before I get into ERP, you need to understand all these concepts so that you will be able to emphasize or enhance your knowledge when you are reading about ERP. Okay. So first, let us do the quick recap of what we have discussed in day 1. I hope the screen is visible. I'll make a little bit larger. So as you are aware, we have total 5 chapters. See, I'll give you a quick, anyway, we'll discuss once we get into the ERP. So there is a linkage between your chapter number 1 and chapter number 2. Similarly, there are many instances where you see the topics are interrelated between chapters. So as I said in our day 1 class, don't read this paper just as a theory or to pass the exam. All these concepts will be helpful in your real time as well, depend on the career you choose. So in chapter number 2, Financial and Accounting System, we started with introduction. What is meant by, let's see, what is meant by a system? Okay, system is set of procedures or process. Then we understand what is a process. It is a series of steps designed to achieve a common objective of the organization. And then we got into a couple of concepts in computerized accounting system. We talked about types of data, master data and non-master data. Master data means data which is relatively permanent in nature. Non-master data is which is not permanent in nature. A couple of examples we have seen. And also we talked about what are all the types of master data under accounting category, under inventory, payroll, statutory. And we gone into voucher types. So where you have different kinds of vouchers. Voucher is nothing but a document or a screen from the ERP application purpose. What is the objective of voucher? To record a specific category of transaction. Transaction means is nothing but an activity happened in the business which have the financial impact. So under accounting, you have seen different types of vouchers. Contra, basically you use for contra voucher to record the fund deposited into bank or withdrawal from the bank or bank to bank transfer. Similarly, payment voucher to record the payments from your supplier. So like this, we discussed about different kind of vouchers under accounting category. Similarly, under inventory, we discussed about purchase order. Is basically purchase order. Organizations create purchase order whenever they want to procure certain material or service from their vendors. It's a document on which we will update to the supplier, hey, I need these are all the items with this quantity at this price by this time. So this is the typical example of purchase order. Stock journal, basically to to record the transfers between departments, physical stock to record the on-hand quantity of it, delivery note, whenever you are shipping the material to the customer, you use delivery note document. Receipt note is just opposite of delivery note. If you are receiving material from your supplier, you use receipt note. I believe in chapter number 1, when you are discussing about different process flows like procure to pay, order to cash. So these documents you would have already understood, I believe. So it's just an extension of chapter number 1. Chapter number 1, you have a theoretical knowledge of what is meant by a process, what is meant by business process like P2P, O2C, order to cash. In today's chapter, I will be showing on live in P2P, means what is meant by P2P, how it is like in real time we use or we follow certain steps in P2P process. So like this, we have seen different types of voucher types. Voucher numbering is just a sequential numbering, and you can also have some prefix and suffixes to identify the document uniquely. Accounting flow, we also understood previously how you use it to do, like you from the transaction till preparation of financial statements. Whereas in computerized accounting environment, specifically in finance and accounting systems, how the accounting happens. I demonstrated lively by creating an invoice, or I think short-term investments purchase. So the moment I enter a journal entry, automatically system created the trial balance. So unlike manual, in computerized environment, lot of steps are taken by the system itself. And we discussed about types of ledgers. So under types of ledgers, traditional accounting, we talked about personal, real, nominal, but in computerized accounting environment, it will be ledgers with debit balance and credit balance. Under a debit balance, you have asset and expense. Under credit balance, you have income and liability. So, and finally, we went into grouping of ledgers. So basically, you group all the ledgers into 4 categories: income, expense, asset, and liability. So these are the fundamental topics we understand or discussed in computerized accounting system. And we also gone into little bit technical part of it, where we discussed about what is meant by a front end and back end. Even I showed by creating an invoice from the front end and checking, means picking the same transaction from the back end. And we also talked about the restaurant example, why there is a need of front end and back end. And we discussed about application software. I haven't put much emphasis on this topic because we have very detailed explanation in chapter number 4. We will discuss in detail there. Then we moved on to installed applications and cloud-based applications, MS Office versus Gmail. And on these 7 points, how they are competing with each other, we discussed. Okay, so these are all the topics we discussed on our day 1. So I hope you are clear with day 1 topics. If you have any questions, just let me know. I'm just seeing the chat box. So please post your questions on day 1, and then I can proceed further with the rest of the topics. So there is a question from Tanvi. What is the difference between transaction and master data? See, transaction is nothing but an actual event in simple terms. Let's say company purchased some material. Okay, they want to purchase this material. It's a transaction, right? They're purchasing the material, they're selling the material, paying the salaries, incurring some expenditure. These are all the different types of transaction. In a transaction, when you're entering data, there could be certain data which is classified as master data and non-master data. So typically, I think, let me open this day 1. Yeah. Sorry. Yeah. See, if you see, Tanvi, this is a journal entry. Okay. So where the journal entry is cash, means capital brought into business. So this is called a transaction. Okay. So if you convert the transaction into accounting entry form, or if you are recording the same transaction into ERP, you need to enter certain details, right? There they classified the kind of data you enter. Certain data comes under the category of master data. Certain data comes under the category of non-master data. So transaction is a holistic picture. In transaction, you will have master data and non-master data. I hope it is clear. Okay. Difference between stock journal and physical stock. See, stock journal basically you use if you are transferring the stock from one department to another or one location to another. Let's say there is a manufacturing organization. They have different godowns. Okay. In one godown, they maintained one stock, but there is a requirement in another godown. So they are moving the stock from one godown to another godown. To move that means, see, ultimately, if you see in the system, currently the stock is currently showing in godown number 1, right? Physically, you are moving it outside of the system. You are moving from godown number 1 to godown number 2. But in the application, in the software also, somebody has to tell to the system, hey, this stock is not available in godown 1. It is moved to godown 2. So that transaction is recorded in the system using stock journal. Whereas physical stock, it's very simple. I think if you are doing article shift, you might have heard about stock audit, right? What you do, so you on a periodic intervals, the internal auditors or the part of statutory auditing on a yearly basis, you do the stock audit. Means on physically outside of the system, what is currently lying on the ground will be counted and compared with the system quantities. So this is called physical stock verification. See, on the balance sheet, you are showing I have so much millions of stock in my factory. Who authenticates or how you will authenticate it? Somebody has to go and check, right? That is nothing but as part of your stock audits. So when you calculate what is there on the ground and compared with the system, so that transaction is managed through physical stock document. Okay. And Mansha, there is a question. What is the difference between configuration and master? Configuration is nothing but a setup. Okay. In simple terms, remember configuration means setup. Master, I told you, right? It's a supplier master. In accounting, in examples, I think we have seen this. See, these are all the different types of examples and master. So what else I can explain you? This is the definition. If you ask me, master data, a data which is not means which is not keep changing it, the name or the address or the ledger names in accounting side. On inventory side, the stock item name. These are all the master data. Okay. Okay, so there is a question from Ankur. Sometimes it is possible that non-master data selected from the list. Sir, can you please give me an example? Okay, I will give you. Himanshu, ERP means Enterprise Resource Planning. We will be spending good amount of time on that. Don't worry. Right now, just abbreviation is Enterprise Resource Planning. And transaction data and non-master data are same. No, I told you, right? Transaction data is a broader term. It's an umbrella. It contains master as well as non-master data. In this example, here, the transaction is capital brought into the business is a transaction. It has master data on left-hand side, and also there are certain elements which qualifies under non-master data. So transaction is a broader term. Okay. So Himanshu, sorry, there is a question, right? Ankur. Once I log into the application, I will demonstrate that. So now it might take some time. Fine. How come transaction data can be selected? Tanvi, Ankur, your both queries are interrelated. Once I get into the application, I will show you so that your doubt will be clarified. Jaspreet Kaur, contact numbers saved in the phone are master data. Of course, yes. Okay, good. So we spent good amount of time now. Let me start with the content of day 2. So we stopped there in understanding the non-integrated systems. Okay, but before getting into it, all the stuff, we'll definitely read the book and read through the PPT. but let me give you the practical approach. Why means still I can understand that many students are having doubt about why ERP or what is ERP, why I'm reading all these things. Okay, let me give you a context. So students, please be attentive. The next 10 to 15 minutes is very important for entire day-to-day session. This gives the foundation. If you understand my concept for next 10 to 15 minutes, the entire next 2.5 hours class is very easy for you. Okay. Now, I want again more interactive. Don't keep it as a monologue where I speak, you listen. You keep asking questions. I'm happy to see that a lot of questions have been asked. That means you're trying to understand the concepts. So I'm happy for that. Due to the time limitation, again, I'll try to answer as much as possible. If you still feel any questions are unanswered, feel free to drop to EIS-enter@ica.in mail. Okay. Now, let's get into the concept. Let's take any business. Okay. What is the objective of starting a business? Students, please respond. What is the objective of starting a business by anybody? I'm waiting for the responses. I'm still seeing the last questions. Ankur, yes, transaction data include both master data and non-master data. Perfect. See, Afreen, in the contact number example, the moment you save that number against a name, that become a master data. Okay. The entire data becomes master data. Don't separate number versus name. So the entire data, see, a name, a number without a name doesn't have a meaning to it, right? So ultimately you are linked to a person. That means it belongs to that person. So club both and that will become a master data. So I have asked a question. What is the objective of anybody to start a business? Okay, I see a lot of responses. So sorry for that. I think it's a delay in chat box refresh. So you guys are quite fast. So I see a lot of answers: earning profits, earning profit, capital. How come capital is a objective, Surya? Competitive advantage. Of course, ultimately, you guys are on spot on. So creating customers, of course, this is a subset of the major objective, Sonika. So the major objective of any business is to earn profits. Okay. Anybody can tell that is the sole objective of starting a business. So don't get into discussion of a business started for like you have NGO, non-government organizations, not for profit organizations, NPO, all those stuff. So make the discussion simple. So businesses are created to generate profits. Now, how profits can be generated? How a business can make a profit? I want you to tell, because see, it's not something I'm discussing technical subjects. It's a very generic. As being your future chartered accountants, these are very fundamentals. You need not be a chartered accountant to answer these questions for sure. So just tell me how a business can make profits. So I'm waiting for the responses. So I'm still seeing the last question responses. How a business can make profits. Okay, good. So Hitesh, Jaspreet, Afreen, Tanvi, Mansha, through innovation and automation, you've gone a little bit higher onto it. Basically, in a very simple terms, in a very raw language, by doing purchase and sales. It could be a product or it could be a service. Okay. So even chartered accountant, once you start into a practice, what is the product you are selling? Your services, right? There it's a service. It's not a physical product, but it's a service. Whereas if you take any trading or a product-based organizations where they either, again, we will discuss, so trading and manufacturing businesses, so they buy product, they sell the product. So we understand profits can be made by using purchase and sale. Now, so business decided to purchase. Let's take, for easier examples, like for to follow up the entire the day 2 session, I'm taking an example of a manufacturing business. Okay. So I hope you can understand what is meant by manufacturing business. Manufacturing business means basically they procure certain items, they do some value addition or a processing on the raw material, and finally produce an output. Let's take an example of you take any product, even be it computers. So these will not be sold as it is, right? Somebody has to manufacture them. So all these chips, electronics, plastic material, buttons, screens, so all these upper screen, inside memory, hard disks. So these are all the various raw materials. They assemble everything and they finally brand it under their brand name and sell it. So this is a typical manufacturing process. Take automobile industry, whether cars are come as it is out of a factory? No, right? A lot of, I think in automobile industry, if you take an example of car manufacturing, some hundreds and thousands of small particles will be there. All these are assembled and finally manufacture a car and deliver to the customer. So this is a manufacturing business. So if what they're going to purchase, they can purchase, if it is a manufacturing organization, they will purchase some raw materials. Okay, be it take it in automobile industry. So all the tires, steering, the roofs, glasses, seat covers, everything. Okay, all those raw materials they will purchase. And once they purchase, what they do, they process them. Okay, or they manufacture. So they do a lot of processes on those raw materials and finally create the finished product. Okay, in this example, let's take the finished product as an example, car. Okay, so this is on the purchasing side. So it starts from the raw material procurement till it is converted into finished good. Once the car is ready, how they can make a profit? They have to do the second leg of the this flow chart. So they have to sell that car to the customers, right? That could be an individual customer or to an organization. It doesn't matter. Ultimately, that car has to be sold. Okay. So basically, for any organization, purchase and sales are needed to make profits. Okay. Now, let's take an example of purchase. We are deep diving into purchase. How in a typical organization this process happens. So as you're already attended day 1 session, can you tell me what do you mean by P2P process? First tell me the abbreviation P2P. Let me see how far you could able to recollect. What is meant by a P2P process? Give me the abbreviation of P2P and then tell me what do you understand by P2P process? Faster. Good. So whoever has given this answer, P2P means procure to pay. Procurement means is nothing but a purchase in simple terms. Pay means payment. So in that life cycle, starting from procurement to pay is covered as part of P2P process. Like this, businesses will involve or will have lot of processes to achieve the common objective. So try to correlate the definition of process and also your chapter number 1, automated business process, where you have spent good amount of time in understanding what is a business process Example, the diagrammatic representation of P2P flow, order to cash, what are all the steps involved. So the same thing we are going to do in application now. That's the only difference. There is nothing much. So congratulations to all the students. I am happy to see that a lot of students has given right answers. Procure to pay. So in procure to pay, they talk about starting from raw material. Okay, forget about this manufacturing process flow as well, or even manufacturing or even normal business. Let's say there is an accountant in a finance department. Okay, so he requires a small notepad book for his day-to-day work. Okay, basically they procure all, means the company have multiple department. Okay, you guys are aware about each companies have departments. So let's assume this is a company. Okay, XYZ. They will have lot of departments in the organization to take care of different kinds of activities in the organization. So this point is also should be very clear. Let's say you take an example of finance department. I'm calling department. What is the responsibility of finance department? To take care of all the finance related matters. Now I'm getting into a little bit detail. What are all those? Example, they will take care of the supplier payments using accounts payable. Okay, and they will also take care of the collections from the customer, AR, and also all the fixed assets related stuff. We're going to discuss once I get into the day-to-day topics. I'm just introducing all those terminology so that you can understand in real context on what basis we are trying to read all those stuff. So like this, let's take an example of purchasing department. So this department will have set of employees. So what is their main role? To ensure that whatever company needs, they basically interact with the suppliers, get the material. That's their job. Okay, I will take an example of purchasing, inventory, finance. Okay, take an example of these three departments, how they coordinate with each other in a P2P flow. I will explain you. In procure to pay flow, basically organization decided to purchase certain material, okay, for whatsoever purpose. Maybe they will use that material to reprocess and produce a finished product, or as I said, one of the accountant in finance department requires some stationery material, but currently they don't have with them. So they requested purchasing department, hey, can you help me in getting all this stationery so that we will use it for our processing. So purchasing department, what they do, they will check with the inventory people, who is the storekeeper. Basically, they are the custodian of all the materials with the organization. So they check, hey, there is a request from the accounts department. They need certain stationery. So they will check with their inventory whether that stationery is available or not. If it is not available, then they update the purchasing department. Hey, there is no stock. We need to procure. We need to purchase from outside. Then purchasing department people, they might already have certain suppliers with them, stationery related suppliers. So what they say, they create a purchase order to that supplier. Okay, I'm using the term purchase order. Previously we discussed it, right? So this is the document they create and send that purchase order to the supplier. So supplier will get the purchase order where it says, hey, so-and-so company, that XYZ limited company requires these many notebooks by so-and-so date. So they will ship the material, and once it reaches the organization, the inventory department are the first people to receive the material, because they are the custodian, right? They are the people who take care of all the materials within the organization. So they receive the material and they update to the purchasing department, hey, I received the material with me now. Now the purchasing department knows that the material, the stationery have been requested by the accounts department people. So they intimate to the accounts department, hey, we procured the books. Now you can come and collect, or we will dispatch to your department. Finally, the books have been dispatched to accounts department to one of the person accountant. So he will continue with his work. But so we raised a purchase order. You received the, means inventory department received the material, but who pays to the supplier? Ultimately, money has to be paid to the supplier, right? Now, the finance department comes into picture, where when the supplier sends the notebooks, he also sends the invoice. the supplier created invoice, that will come to the finance department. Under finance department, the accounts payable team will be receiving that invoice from the supplier. So they will enter the invoice into the system and will check, hey, supplier sends an invoice for 100 notebooks, but they will not simply pay the 100 notebooks. They will cross check with their inventory department whether are you really received the 100. They will also cross check with the purchasing department how many you ordered. First tell me how many you ordered. If you ordered 100 and if you received 100, if the invoice is for 100, then they will make a payment. Okay, so finally they make a payment to the supplier. So this is a typical process flow of procure to pay. So this notebook example you can extend to any item or a service. It could be a raw material or it could be some service. The process is same. So in that P2P flow, 3 departments are involved: purchasing department, inventory department, and finance department. So I hope you understand this P2P flow. Any doubts so far? Because this understanding is very much needed so that I can capitalize all this explanation for day-to-day session and day one, the remaining topics from day one. So please confirm me whether you are clear so far what is meant by a P2P flow, how the departments coordinate with each other. I see the previous question responses. Jayant, the last response I could see here. It's a process concerned with purchasing accessory, equipment, raw materials, etc., to create a finished good so as to sell them in order to earn profit. So this is a very brief explanation about P2P flow. Yes, absolutely correct, Jayant. So have you understood the P2P flow and how within the organization the departments coordinate in that process? So far, any doubts or not, please confirm. Good. Yeah, Himanshu, of course, the finance department not only takes care of the payment, ultimately they are responsible for creating the accounting. Okay, so how that happens, you remember when I showed in day one, I entered the short-term investment purchase as an entry. Automatically that takes care of it. At the same time, I created one insurance payment, one invoice booking. When the moment the payable department booked that invoice, the back-end accounting will be taken care by the system. They need not worry about creating the accounting, posting to the ledgers, creating the trial balance, blah, blah, blah. All those things are taken care by the ERPs. So all they need to do, enter the transaction to the system. That's the only job they need to do. Good. So now, see, from where we started from here, businesses, objective profits, how they can make by purchase and sale. Under purchases, we took an example of P2P flow, and then we understand how each department interact with each other in a typical example of that stationary purchase. Okay. Good. I will come back to Milton. Is the work process of every ERP same? Absolutely. Because see, you use Gmail or you use Yahoo, you use Hotmail. Okay, these are different applications of email technology, but are they going to do the same or will they do differently? See, the look and feel, a little bit extra features might be here and there vary, but the ultimate objective of each of them are same: sending an email, receiving an email. Similarly, ERPs, under ERP, even in your textbook, they have given a lot of examples for ERP, open softwares, a couple of examples. I use Oracle, whether I use SAP or I use Tally or I use Microsoft Dynamics, JD Edwards. So I'm taking the topmost ERP products in the market. So irrespective of the product, ultimately they do the same. Okay. So from the business perspective, whether you use Oracle or SAP, the process is same. They are buying stationery from supplier. How you enter, how you generate the reports might vary from software to software, but the processes will not change. Okay. So this is about procure to pay. Similarly, you might have heard about order to cash. Okay, O2C, order to cash. This is your chapter number 1. So that's the reason I'm not going very in depth of explaining order to means these process. But I would like to ensure that you guys have a basic idea about these process. Under these process, how the departments are interlinked. Yeah. So order to cash, let us take a similar example of order to cash. How? Okay. Now let's take an example of order to cash. So again, there is a department. Sorry, there is a company. So don't get bored. These are all the needed for you to understand. You will understand once I get into the topics. If I directly tell the topics, so that's a different way of understanding. So that's the reason I want to bring as much as practicality to the subject. So the same organization. Now we are going to understand about O2C cycles, order to cash. Basically, this is the opposite of P2P. So in P2P, where organization requires certain product or service, so they are approaching suppliers, getting the product or service, and finally making the payment. Whereas under order to cash, so it's from customer is approaching the like XYZ company or our company for certain product or service, and finally we are delivering the product or service and getting the money from them. It could be a product or a service, finally getting the receipt of amount. So this is the typical example of order to cash. In order to cash, the departments that are going to involve, ultimately finance department for sure will be involved, because they are the people who are going to create customer invoice ultimately in the system, customer invoice, and also once they got the funds or amount from the customer, they are the people who take care of this part of the entire O2C cycle. So the first person or department who actually form part of this process is sales department. There will be a customer, he requires a certain material. They approach your sales department. Hey, I need so and so material of your company. So can you deliver it to me? So the sales department start the process by creating a sales order. Okay. Once the sales order is booked, so if that item is already available on your inventory, you can simply ship the material to them. Okay. If that item is not available, then it has to be manufactured. Okay. You have to do the manufacturing of the product. Once it is completed, you will be delivering it. So first, the second department that get involved is inventory department. So these are the people who will tell how much stock is currently lying with the company. If the stock is available, simply these people, inventory people, will deliver to the customer. If it is not available, then the next department that comes into picture is production department, who actually manufacture the product. Okay, these are again various departments in the organization. So sales order will be booked. If it is available, it will be shipped from the on-hand quantity. If not, it goes to production. Again, once the finished good is ready, it will be shipped to customer. Okay, so at the time of shipment, I talked about voucher, right? This is the place the delivery note is created by the organization. I am shipping so much of material to the customer. Once the customer receives the material, along with this, we will also send the invoice, customer invoice, because we need to get the funds from the customer, right? So we give the delivery note as well as invoice to the customer. Once customer receives the material, he will pay the amount as per the invoice terms. Okay. Finally, we will be receiving the funds. So this is order to cash process. So understand the process at high level, understand what are all the departments that form part of that process and how it happens internally. Okay. So this basic knowledge is needed for you to understand the ERP now. So as we take an example of P2P and O2C, I think we have good understanding now to go back to our day one material. Now I'll continue from non-integrated systems. So far, any doubts, students? I see students are start asking what is the connection between ERP and non-integrated systems. With this explanation, I'll explain you what is it. Yeah. Any doubts so far? Almas, there is a question from Almas. Why customer directly contact with manufacturers? Of course, right? Okay, you might, you're talking about the, okay, I got it. I got your question. See, again, as you rightly said, if you or me need a product, we are not going to the manufacturer of the product. Definitely, we will buy from the local shop or some online platform. So I've just cut down that cycle. You should have, again, in chapter number 4, e-commerce and m-commerce, we will be discussing about how the traditional way of process works versus the e-commerce platform. But let me tell you. See, right, as you rightly said, there is no hard and fast rule that customer directly goes to the manufacturer. But my question to you, when I say customer, why you think you and me as the customer? Okay, let's say there is a manufacturer. Okay, usually his job is procure the raw material, prepare the final product and ready and sell it. Okay, then the next person who comes into picture is the, let's say, the distributor. This is a typical, very age-old traditional way of dealing business, but there is a change in this. But just to answer your question, so manufacturer is there, there is a distributor, and this distributor will give the products to retailers. Retailer 1, retailer 2, retailer 3. So these are the people who actually deals with the end customers, like you and me. Okay. So the ERP software can be used by this manufacturer or this, or even by retailers as well. Anybody can use ERPs based on their need. If you talk from this person, who is the customer for him? Distributor is the customer. So he's directly reaching to the manufacturer and getting the products. If you talk from the distributor angle, who is the customer from him? All the retailers who procure from him are the customers. So if you talk from the retailers, you and me are the customers. So the customer definition will vary from person to person, from the context to context. Okay. I hope I answered your question. Okay. Now, let me get into the non-integrated systems. Now, so the non-integrated systems, in the previous example I showed, okay, where there are multiple departments. So like, let's see, if you see, there is a department of manufacturing, sales, HR department, quality department, accounting, treasurer. Like this, there are various departments. Don't think that these are all the only list of departments that exist in an organization. The number of departments vary from business to business. As I said, if you are a trading business, you don't have a manufacturing department, right? You just purchase material, sell the material to your customer. If you are a manufacturing organization, you will have a manufacturing department. Let's assume you have into construction business. Then you have a projects department, because each construction is considered as a project. So if your organization is a project oriented organization, then you will have a projects department. But bare minimum, you take any type of business, be it trading, manufacturing, or a service, the minimum departments or processes that they are needed is purchasing, selling, purchase, sales, finance, HR. These are the minimum departments they will definitely need, because you take any kind of business, these departments are needed. So if each department earlier, before, see, you might have a doubt, right? All these ERPs are there from maybe from last 2 decades or 3 decades, but ours is a long back, right? Means the human existence is quite back from before the ERP's development for sure. So before ERPs, how the organizations used to work and deliver the same services. So let's say before the smartphones, what kind of phones you and me used to have? The normal feature phones. Before that mobile phones, you and me used to have landlines, right? Before the individual landlines, we used to have the STD or ISD booth. Before introduction of telecommunications, you and me used to have communicate with telegrams or postal cards, all the stuff. So communication always happens, but the medium of communication keeps changing as we evolve from time to time. Similarly, in organization also, it doesn't mean that if there is no ERP, organizations can't perform or function. So they use it to perform, but in a bit difficult way, right? See, now it's very easy for us to communicate with the person who is there in US with the WhatsApp. You can make a WhatsApp call. Previously, how much you need to pay for ISD call, how costly it used to be. Now, free of cost, you are communicating with a person who is geographically stated somewhere else, some miles of kilometers from you, away from you, right? So understand that fundamental point. Previously, before introduction of ERP, how the organizations used to do, each department might have, see, I have given these are all some product examples, you need not remember it. So G Treasury means all I want to understand is, all I want you to understand is different departments used to have a different software to manage their set of activities. Example, in purchasing department, you understand from my previous example, what is the objective of purchasing department? To procure the material as per the business need, and that's the only job. They procure the material. What is the responsibility of inventory department? They receive the material and they deliver the material either to the customer or to the internal departments. What is the role of finance department? To take care of entire finance operations, be it the supplier payments, customer receipts, internal company funding, all those stuff are taken by the finance department. So to manage their own set of activities, each department used to have their own different softwares. So each department used to have different types of softwares. If they have different types of softwares, if they want to communicate with each other, it was very difficult. Okay, this communication was very difficult because each one of them are using different softwares. So the communication or exchange of information is very difficult. So that is the era where they call non-integrated system, which is not communicating with each other. Okay, so just read to the definition now. A non-integrated system is a system of maintaining data in a decentralized way. Okay, let's take an example of the purchasing department. Okay, similarly, the finance department. In P2P Flow, we are talking about suppliers. Okay, purchasing department responsibility is to raise the purchase order to the suppliers, right? So they are using some software. You name it as X. So they maintain the supplier data here, all the names of the suppliers and their addresses and what are all the products they deal with. All those data they maintain here. Similarly, finance department, when the invoice comes, they need to make a payment to the supplier. So they also in their own system, they are using some software called Y. So they are also maintaining the data here, the same supplier data. My supplier name is, let's say Uday here. Even here also, my details need to be maintained by the finance department because they both are using two different softwares. So the same data need to be maintained at multiple places. Okay, that is one challenge. The second thing, consistency or integrity of the data. Let's assume the supplier address. Okay, previously he is from Delhi. Okay, now he moved to, let's say, Hyderabad. Sorry, I'm not, so my intention is here. So who actually get to know the change of address? Who are the first people get to know? The purchasing department, because they are the front enders, right? Who very frequently deal with the suppliers, and also especially to get the material, they need to know from where they are operating. So they updated that address details in their system called X, but the finance department didn't know that. Okay. Again, whenever they come to know, they need to go and update the details in their software. Hey, for this same supplier, there is a change in the address. We also need to update. But there is no guarantee that both the systems are maintaining the accurate data or same state of data. Okay. There is a chance that these guys might have updated, whereas the finance department might not have updated because they don't know that there is an update in the address. Okay. All these things can happen. There are various examples. I can keep talking on non-integrated systems. So in simple terms, non-integrated means they are not communicating with each other. Everybody maintains their own softwares in simple terms. So this is what they're saying. It maintains its own data. So the same supplier is same. Purchasing department also maintains. Finance department also maintains, and it's not in an integrated way because they won't communicate with each other, two different softwares. So they need to communicate with each other, but still they use their own data. So in a typical P2P flow, purchase department raise an purchase order for the same supplier. Again, finance department also raise an invoice for the same supplier. So they need to communicate, but again, they maintain their own set of data. So what is the issue of this? Communication gaps and mismatched data. So this is what I was talking about. There is a chance that if two persons are maintaining the same data, there is a chance of communication gap and mismatch of the data. So non-integrated systems means, in simple way, each one is maintaining their own software and own set of data. And at that circumstance, it's difficult to communicate and maintain the uniformity of data. So are you clear about non-integrated systems? So once you understand the non-integrated system, then we will get into what is ERP, which is more important for us today. Good. So now let's move on to ERP. Now you understand previously how it used to perform. As I said, before telephone or a landline, we use it to communicate via postal. It could be an inland letter or a postal card. Once you have landline, we used to use landlines for communication. Then the era of mobile communications came in. Then we have smartphones, now super smartphones, all these generations we have seen. So similarly, from the organization perspective, previously they used to fight with that non-integrated systems. Means each department used it to maintain their own set of data. There is no communication or a uniformity of data. Nobody knows what is happening inside, because if you keep everything in different rooms, how you will know how much quantity you totally have, right? Similarly. So in case of, to avoid all these challenges, there is a introduction of a new software called Enterprise Resource Planning. Okay. This software came. What it does, it gives one single application. Okay. As I showed in my example, there will be one application which will be used by all the departments. Now go back to the same example. Let me go back to the example. So non-integrated systems is very clear, right? Let's assume you have one software. That software name is Enterprise Resource Planning, nothing but a software. So organizations will still have the same departments. Let's assume it's a finance department, sales department, purchase department, manufacturing department, projects department, HR department. So what we do in ERP, in the ERP software, it have a partitions called modules. Okay. A big ERP software is divided into internally. Okay. It's not physical division. It's a logical division. So these are called modules. Okay. So for finance department, we know what actually finance department needs. They need to process the supplier invoices, customer invoices, receipts and payments, and all those reporting purposes, right? So in this software, I have financial modules, like what are all the things that are needed by the finance department. That functionality is there in the form of a module. Module means a logical division of the big software. Okay. So this will be used by the finance department, but the software is same. There is only one software in the organization, but that piece of software is used by the finance department. Whereas sales department they need to have access to the customer data. They need to create the sales orders. So they will also have another piece in the same software, which is managed by the sales department. Okay. So like this, for each department, there will be one piece of software, means under the bigger software, which is used by the respective departments. But all these are form part of one single software. That's the reason they can easily exchange the data and see the same data. I will show you on live. Don't worry. Just understand the concept. Then I will show the live demonstration of that ERP application, what I have. Again, in your syllabus, all the terminology or the examples they have taken from SAP product. Okay. Just as an example to explain the concept, they used SAP, but I don't have an SAP application on my machine. All I have is an Oracle application. Again, you need to understand the functionality. You are not here to learn SAP or Oracle or something else. So focus on understanding the concepts. So each department will be used by the respective modules. So whatever the functionality or day-to-day job they need to do, they will given access to those functionalities so that they can perform their job. Okay. Now, so I will give a quick glance of that ERP application, what I'm talking about. Yeah. So this is the ERP application, right? I logged in, means by using username and password. How you log into your email account? Similarly, in the ERP application also, every individual business user will have their own logins. Using their username and password, they will log into it. So if you see here, you are seeing general ledger, you are seeing order management, you are seeing payables, purchasing, receivables. So these are the different modules. Okay. Let's say I am from purchasing department. Okay. My role is raising a purchase orders and ensuring that the material is coming to the organization. So I will be given an access to this module only. So I will log in here. If you see here, the kind of activities I can do, I can create purchase orders. Okay, so I will come to this screen, this voucher, and create a purchase order for so and so supplier. Here I will be selecting the supplier. Let's say in our example, I am taking 3M Healthcare as an example of one of the supplier which is there in the system. The name is 3M Healthcare. Students, have you remembered this supplier name? In our day one, I created one insurance payment invoice with the same supplier. So if you see here, supplier has been created only once in the system, but that data can be used by the purchasing department as well as the finance department. Let's say in the previous example, see, I am in the non-integrated systems environment. Purchasing department also maintains the supplier data. The finance department also maintain the supplier data, right? So when they're creating the purchase orders, they use this supplier information. Supplier is same. Let's say in our example, the supplier name is 3M Healthcare. Okay. Here also 3M Healthcare. When the finance department creating the invoice, they use the supplier data which is created in their system. That is how the non-integrated systems used to work. Whereas in ERPs, the supplier data is created at one location. Okay. Only one time at one location will be created. Both purchasing and finance departments are using from the same place, from the same software. So what happens? What is the advantage? you need not create multiple times. You need not maintain the data multiple times. So that is the advantage of enterprise resource planning softwares. So everything happens at a one central location where different departments can use the same data and exchange the data as well. Okay. So in this example, as I am showing, so this is a purchasing module. If you see the kind of activities, what they can do, they can create purchase orders and they can receive the material. So these are the typical activities of the purchasing department. Whereas if you go to finance department, especially on the finance, if you go to the payable department, where their responsibility is creation of supplier invoices. So their job is they create the invoices. Again, I am now in payable department, invoice creation. Even here also, I can search for the same supplier, 3M Healthcare. Okay, so this is what the advantage of ERPs. Now let's go back to the PPT. So ERPs is an enterprise-wide information system. So it's enterprise-wide information. It's not that individual department level. For the entire organization, there is only one information system designed to coordinate all the resources, information, and activities needed to complete the business process, such as order fulfillment or a billing. So the same example you can extend to the P2P flow as well. In order to complete that cycle, all the departments, the purchasing department, finance department, inventory department, they log into the ERP and use the same data and exchange the information from one department to another. So accounting and finance function is considered as backbone of any business. So hence financial and accounting systems are important and integral part of ERP systems. So as I showed you, under finance, ultimately, see, it's not that you record the transaction, right? It need to create a journal entries and finally prepare the trial balance and financial statements. That's the whole objective of business. We started our discussion from business objective is profit. How do you know that you made a profit or not? You need to record all your transactions into one particular system, one particular software. Based on that, system will calculate whether you made profit or not. Okay, that's how the ERP software is linked to business. So the common features of ERP, it have a common database. I showed you, right? There will be one place where I create the supplier, and once I create it, that can be used by the purchasing department as well as the finance department. And there is one more concept here, modular software design. I told you, right? There is only one software where you have purchasing module, finance modules, sales order modules, order management module to manage your customer related activities. So it's a modular software design. I would like to emphasize one more thing on modular software design. What is the advantage of it? Trading versus manufacturing. Okay. So there are two types of businesses, an example I'm taking. So what usually the trading business does, they procure some material, they sell it off. Okay. Let's say they procure that material for 10 rupees, they sell to the customer to 15 rupees. That is a simple job done by the trading organizations. Whereas manufacturing organizations, they procure all the raw materials, 10 rupees, 15 rupees, 20 rupees, something like that. And they do some value addition. Value addition means they convert that raw material into some finished product. And due to that value conversion, the raw material cost is 15.35 here. Okay. The cost of conversion is, let's say, 30. Total cost is 65 rupees. So they might sell to the, they convert into finished good and sell to the customer for rupees 80. Let's assume. Okay. So if it is a trading business, do they need a manufacturing functionality in the software? They don't need it, right? So these guys will not buy, they need not buy the manufacturing module. Okay. Even when you are buying a software, example, if you are buying MS Office, you will have Word, Excel, PowerPoint. Okay. Let's assume you never use PowerPoint. Assume as an example. Well, Microsoft gives an option to buy only Word or Excel, only PowerPoint. Yes, right? That's a modular way of selling it. If they say, no, whether you use it or not, you have to purchase all the 3 products for me, and it is costing some 6,000 rupees or 7,000 rupees. If they say like this, there is no other option, you have to buy, right? So whereas in the ERPs, as these are very costly, not only for purchasing, but also to maintain. Okay. So basically what businesses does based on their operations. If it is a trading business, they don't need the manufacturing process or a manufacturing module. So they don't invest on manufacturing module. They simply buy purchasing, sales, finance, maybe HR or inventory, something like that. Whereas manufacturing business, they definitely need manufacturing module to manage the manufacturing activities. Don't worry, we have a thorough discussion on each module, what is it does. Okay, then you can much appreciate the example I am giving here. So you understand what is ERP now. Okay, it's an enterprise-wide information system. So consolidated, there is a single system. So this is what they're talking about. Different departments access the data from the same database. This is what they're talking. Nothing much. So very briefly, they talked about the what is an ERP from the definition perspective. So far, any doubts, students? What is meant by ERP? Any doubts? There is a question here. Samriddhi, can we say that in ERPs, suppliers become master data? Absolutely, yes. Hiral, what is the meaning of real time? Okay, when I say real time, the moment it happens on the ground, you will come to know. Let me take on the example of stock exchanges. Okay, you are sitting somewhere in your home, some part of the country. The stock prices have been gone up or down. Are you getting those updates on real-time basis or on offline basis? When I say real-time, on stock exchange, right now the stock is being traded at, let's say, 1,000 per stock. If you are seeing from your mobile application or from some desktop application, you logged into some demat accounts or stock broking agents, like ICICI Demat or Zerodha or so many platforms, right? So you log in there, you are seeing particular stock price. So which is exactly reflecting the market price, right? That's a real-time data. Okay. Great. Now, so I'm not expecting you to understand everything about ERP because we have very thorough discussion coming forward, right? So understand the basic or how it is connecting to business. So that is what I'm trying to do from last 1 hour. I believe you got that point. Now they are introducing few more terms, data warehouse and warehousing. So data warehouse is nothing but storing of all the organization data in electronic form is called data warehouse in very simple terms. Data warehousing means the process of using the data and create in more effective way for decision making is called data warehousing. Okay. These two terms, again, you will be covering in chapter number 3 in a very detailed manner. So that don't worry. Now, just understand that these terms you already heard in chapter 2 and what is, see, even in your booklet, they don't explain beyond this. Okay. Don't think that I'm keep postponing the topics. The objective of not spending on the same topic, because when they logically kept the topic in a separate chapter, there is no point discussing in length and breadth again and again, right? It saved the efforts. So data warehouse in simple terms, it's a repository of organizations electronically stored centralized data. So it is a diagram which is not there in your syllabus. I just got from the outside. Let's say, so you have a data. Okay. It could be legacy data. Again, these are all some technical terms. Again, you need to spend good amount of time to understand. So in simple terms, you have the data. When I say data, again, all your transaction data. Okay. In simple terms, your purchase transaction, sale transaction, purchase orders, sales orders, all the stuff. So the data is in the different formats. Assume that each data is maintained in a different system in a different format. You have to bring it to a common format to keep it in a particular system. So that's what ETL, extract, transform, and load. Okay. So this also very detailedly explained in chapter number 3. So once you convert the data into a common form, Then you can subdivide it into data marts, and then from there you can use the data for any decision making. So in our day 3, okay, in the same chapter, we are going to understand how the data will be converted into information and finally to knowledge and then insights. So we will have a beautiful example to understand this transmission of data to insights. Okay, so very high level data warehouse is a nothing. Warehouse means usually we use for godowns, right, where you maintain your some stocks. So if you are storing the data, it becomes data warehouse. That's the very layman definition of data warehouse. Now we are getting into the benefits of ERP system. See, I will not talk about these benefits now. I will hold it once we complete our day-to-day topics. Then you will appreciate why these benefits are getting from ERP. Now itself, if I explain, it will just become a theoretical explanation. So it's not a complexity to understand, very easy, self-readable topics, but I will come back to these benefits once we complete the modules, the business process modules. Then we are getting into some quick assessment. So far, I've been talking from last 1 hour. So let me take a break of 1-2 minutes. So can you please answer this question, students? XYZ Limited is an ink manufacturing company that implemented enterprise-wide information system to coordinate all resources and activities needed to complete various business process. So in simple terms, they have implemented an ERP software. Choose the main characteristics of ERP system from the following. So what is the main characteristics of ERP system? It separates data maintenance by each department. It gives a centralized database. C, no direct interdepartment communication, no change in cycle time. Cycle time is the word which is explained in benefits. I haven't talked about it. Cycle time is nothing but, if you see here, this is the word. The time between place of order, delivery of the product. From the customer perspective, how much time means it helps you to reduce that cycle time. The moment you got the order from the customer and the time it took to deliver. See, if it is longer time, what happens? Customer will not place order with you. Let's say on Amazon or Flipkart e-commerce platforms, if a particular product is one e-commerce vendor is offering in 1-day delivery, whereas the other e-commerce vendor is offering 5-day delivery. Okay. To which e-commerce you will place an order? Ultimately, the person who is giving in a quicker or a faster delivery, right? The same happens to the organizations as well. So how to reduce is what is help means in one way, the ERP softwares helps to reduce the time gap. Okay. We will understand that later, but just I want to explain that cycle time. Now tell me what is the answer for this? Himanshu, I'll come back to your question. Just hold a minute. Okay, let's see the answer. Students, whoever have given answer B is the right answer. So ERP's main characteristics is centralized database. That's how you can, every department access the data from the same location so that the uniformity or integrity will be there. Good. So I can see except 1 or 2 people, students, almost everybody has given answer B. For the students who have given answer A, separate data maintenance by each department. If that is the characteristics of ERP, then there is no point, right? In my previous example, that is the characteristics of non-integrated system. Purchasing department maintains their own data, means supplier data they also maintain. Finance department also maintains. So that's the characteristics of non-integrated. Whereas in ERPs, they need not maintain separately. All the data is maintained at one location, but who maintains? It's a business call. Whether it is maintained by purchase or finance, only one team maintains the data, but it will be used by the other department as well. So the main characteristics of ERP is centralized database. Good. So we completed the non-integrated ERP systems, data warehouse and data warehousing, and we also had a quick assessment to it. So the last part of the major part of day 1 is risks and controls in ERP environment. See, so far I'll not take much time. It's very simple to understand. We can quickly finish it before the break. So the risks and controls in ERP environment. So far we discussed, or our perception is, having an ERP in the organization will give a lot of benefits like this, and it helps to information integration. In all the perspective, we are seeing the positive side of ERP softwares. Now, definitely for everything, there is, means for a coin, how it have the other side of it. Even the ERPs will also have some kind of risks. If those risks, if how to manage those risks, or what kind of controls you can build, is what we are going to discuss now. I remember that on day one, I'm really sorry that I forgot the student name. There is a question that, sir, if I'm implementing a software, users, the business users, there could be a possibility that they will resist. Means they are not interested to have this software, because again, they have to learn the software, and especially for younger generation, they can learn it. But think about people who are aged or nearing their retirement phases. If you ask them to learn a software, for them it will be very difficult. So definitely there will be some resistance, means some opposition, okay, for the decision by the top management that don't implement the softwares at all. Let us continue the existing way, so that we are already used. If you implement now, I have to learn. In my real-time experience, I have seen lot of times this resistance. It's a practical scenario. Many business people, for various reasons, they might have their own reasons. I don't want to talk about it, but they will resist the implementation. How to overcome is what we are going to discuss now. Okay. First point is, having a central database is a risk. Okay. Few minutes ago, even in the assessment question, I said having a central database is a good, but on the other side, is it a risk? Is what a question here. So the other side of the coin says, yes, it is a risk, because two major risks they are talking about. Risk of leakage of information or access of information to non-related people. So if you maintain the data, okay, in one place, and the same data is given access to finance, purchase, HR, sales, projects department, manufacturing department, like this, there are so many departments. You're giving access to the same set of data, then is it not a risk? Of course, yes. Okay. You might have a doubt, sir, all of them belongs to the same company. What is the problem if they access the data? Because we're all belongs to, see, in a family, there is no concept of secrecy, right? It should be known to everybody. Okay. But it's not the case with organization. The data access should be given based on their role. Okay. There is a separate concept called role-based access control in the following slides. We will talk about a little detail there. So for now, just understand, having a centralized database is a risk, because the information can be leaked or accessed by the non-related people. Example, in HR, I will give you a classic example. HR department maintains all the people, okay, X, Y, Z, all the employees' data, okay, their salary details. All the data is stored here. There is a person from finance department, okay, and his colleague is also there. His name is, let's say A, he is B, okay. They both are on same level, but he is more curious to know how much salary his friend is getting from the organization. Okay. So as we know that HR department also stores their data in one location, right? If this guy from purchasing department is able to access the salary of B, don't you think is it a risk? Is it ideally needed? Means, is it allowed to give access to other person's salary to somebody else? No, right? So this is what they're saying. So there is a chance of risk of leakage of information or access of information to non-related people. Basically, for purchasing guy, a person from purchasing department, all he need to access is supplier data and purchase orders, a bit of inventory data. That's it. Beyond that, he is not worried about any other data from the organization. Similarly, let's say somebody, somebody from the finance department. Okay, if sales department maintains the customer related orders, okay, customer 1, customer 2, the same product, for some reason, as the customer 1, first customer, we have a long standing relationship with the customer. So that's the reason, even though we are selling 100 rupees to the regular customers, for this customer I am giving for 90. Okay, whereas for the second customer, all other customers, I am giving this product for 100. So that is something between the sales department and the customers due to the long standing relationship they have, a genuine channel. Now, if the finance guy, a person from the finance department, if he access this data, maybe this second customer is a relative or a friend of the person who is working in this accounts department. What he can say, hey, my company is selling you 100 rupees, whereas there is another customer who is getting for 90. What happens? Then this person will come and argue with the sales department, hey, you are selling for 90, why you are selling for 100? So there are numerous examples that we can say. So ultimately, even though we all belong to the same organization, based on your role or a job, the data should be limited. How? We will discuss separate topic. So, but currently understand that's a risk. Then risk of putting incorrect data in the system by unrelated users. So if you give access, let's say supplier master, right? We talked about supplier master. Both purchasing departments or a finance department uses. Okay, in the supplier master, you also maintain the bank details. It's a live scenario happened in one of my client location. So the bank details are also need to be maintained. Ultimately, when an invoice need to be paid, the finance department should know which bank account of supplier they need to make a payment. Okay, so assume that the entire supplier data I told you in my previous explanation. So the data is placed at one location. Either purchasing department or finance department maintains the data. When I say maintain, somebody has to create and somebody has to update whenever required. So that is done by purchasing department. Let's assume that is the case. So what happens? So the people from purchasing department, they are not that good in the banking terms or the finance terms. So they are very good in negotiating with the supplier, getting the order. Okay. That is their specialty. But whereas when it comes to bank details, they need to ask the supplier, what is the account number, IFSC code, MICR code, or even IBAN number. So there are a lot of technical terminology which they won't understand. So what they simply say, somebody has given an IFSC code, but due to the knowledge, like limited knowledge, that purchasing department guy has entered that value in IBAN. Okay, but basically, technically, IFSC code is something different from IBAN, right? So this is what they're saying. If you give access to, means there might be a chance of getting incorrect data by unrelated users. So basically, even when you're giving access, you should assess whether those are the right people, whether they can understand what they're entering into the system. So these are all the risks they are talking about. I hope you understand the major risks of centralized database. Then the risks and controls related to ERP implementation. This is one of the important topic which I want to cover it up. The rest of the things we can quickly finish. I think we can finish this and then take a break. So when they are talking about, see, understand here, the risks are not from the ERP itself. They are basically talking about ERP implementation. When I am implementing the ERP, what are all the risks that can happen? So risks can come from people, risks can come from process, it can also come from technology, and also while implementing and post implementing. So just think from this direction. Okay. So far we discussed about what is an ERP, what are all the advantages, and just started with what are all the risks to it. The first risk, we understand that having a centralized database is a risk, but how to mitigate or how to control that centralized database risk, we have options. Now talking about the other aspects of risk. Now let's see what are all the risks that can see from the people. This is the first one. Change management means See, so far, all the business users are used to manage manually, or maybe they might be used with some software. Currently, I'm just taking an example, no offense. So currently they are using Tally for their operations. So suddenly, if I am bringing SAP or Oracle, so these are very big softwares, right? They need to understand these softwares and how to perform the jobs. So they may say, they keep saying, sir, why we need to implement it? So all our job can be done very well with the Tally. Okay. But management knows what is the real reason why they are going for a bigger product, right? But individual employee level, they keep resisting it. Don't do that. Don't do that. So the risks, what they're saying, so changes in employee job profile. So there is a risk that they might fear, okay, once this software comes, all the tasks are automated. So there is a chance that either I might lose my job or my job profile might go for a change. Previously, everything is in my hands. Now everything is done by the ERPs. So there is a change in my job profile, or they might have removed me as well. See, that's what they're saying. Some jobs might become irrelevant. Okay. Change in the way organization works, or a decision-making capabilities, or a scope. So these are all the fears basically the employees might have when you're implementing an automated software. So how you can mitigate it? Give a proper training to it. Hey, don't worry, your job is not gonna go. All you need to is transform yourself. Okay. Previously, you're doing a lot of clerical job. Example, let's talk from the finance department sake. You are the person who are keying in the accounting entries, preparing the posting the balances to the ledgers, preparing the trial balance manually. Now, all you need to do is just enter one journal entry. System will create the trial balance. So the rest of the time you could able to save. Focus on strategy, decision making. Don't do the clerical job. By doing the same clerical work, you will not be able to improvise yourself, will not add value to the organization. So you need to mentor or coach the employees. Don't worry, you will be necessary training will be given, so that you need not worry about the software. All the training documents, we'll give a user guide so that you can read through it and then practice the software, how to use and all those stuff. Okay, so signed by the users and management means if you take an acceptance from them on written paper, yes, you understand all the process. Then tomorrow they will not say, hey, all these things I don't understand, or even they implemented without even consulting me. So these are all not the ones which we want. So they can't escape from their accountability. So that is how you can manage. I hope I answered your question to one of the student, how you control it. Ensure that you are given proper training and all the necessary supporting documents so that they can practice. Then training part. So many times what happens, training happens at the end of the project. Okay, so in a hurry, so there will not be enough time given by the project timeline, because see, implementation happens on a specific timelines. The project will have a definitive start, definitive end, because they have to control the cost, right? So they can't implement forever. So they have to bear the resources cost, and a lot of cost is incurred. So let's say they say that the project has to be implemented by 6 months or 7 months. So by the time it comes to the end, if the training is started at that point of time, in a hurry, maybe they will not be given enough training to them. So for that reason, so ensure that adequate training should be given to the employees by the hardware or package vendors. Means basically the consultants who go and implement. You should ensure that they have given proper training to your employees. And staff turnover. So basically, this is another challenge you need to manage. So at the time of implementation, all the business processes are known by the senior people. If for some reason, if they leave the organization, there will not be anybody to tell to the consultant, hey, this is how we were using the previous application, or this is how we were doing the previously. So if they leave, it will be very difficult. So ensure that all the benefits are given to them so that they will not leave, in a simple answer. So these are all the couple of risks from the people side, and also from the top management support, of course. So the top management should always support the employees so that they can support well to the implementation team to understand their process and deliver the final product. And also not least, the consultants, means the role which I play is consultant. Basically, I go to a business, understand their business process, and accordingly I implement the software. That is the job I do as a consultant. So what they are saying, people from outside, okay, basically I'm not from business, right? I am from an outside person, so I might not be familiar with internal workings or organization culture. So if I don't understand how that organization works or how the people culture is, so there is a high chance that the project itself might go for a risk. Okay, so basically what they need to do, ensure that you need to have an intermediary to have the bridge between the business and the consultant, so that the project can go for success. So these are the couple of risks that can be occurred from the people side. Similarly, from the process side, what are all the risks? So ensuring so they call program management, right? So what is actually happening should be understood properly by the consultants, so that they can properly give a solution. If they don't understand what is happening in the business and give a wrong solution, then the project itself might go for a toss. Okay, so ensure that the gap should be minimized. And also there is a high risk of business process reengineering. That means before implementation of this software, they might be doing the same process in a different way. Okay, then once the software is in place, they are required to do the same process in a different way. So there will be a dramatic change can happen and improvements can happen. So ensure that the required all these structures, all the trainings have been given properly, so that those change will not impact or scare the people. Okay, then from the technology side, what are all the risks? So when I'm implementing the software functionality, because see, if I take an example of Oracle application, it has, I talked about modules, right? Various functionalities. Around 130 modules it has. That ERP product contains 130 plus modules. But whether all those 130 modules are needed by the business or not, definitely nobody needs all the 130 modules. As I said, trading business doesn't need a manufacturing module. Manufacturing business doesn't need a projects module, something like that. Okay, so ensure that ERPs gives a lot of features and functionalities, but if you implement everything, that will become disastrous. So implement what is needed. So how to mitigate it? So care should be taken in evaluating the required functionalities. So understand what ERP is offering. Out of that 130 modules or functionalities, maybe I need some 5 or 6 modules only for my business. So if you implement light, even the maintenance will also simple. Okay, so ensure that what is you needed, what is they are offering, construct a bridge between these two. Then technological obsolescence. Now let's say if you implement one ERP, as the time evolves, if they don't provide any upgrades or bugs, see, software means there will always have some issues with the software. How big product you talk about, be it in simple terms, you might have seen Android and all those stuff. There could be a lot of issues in the softwares, right? So the vendor has to give a lot of bug fixes. That's the reason we keep getting, if you're using Apple products, you keep getting a lot of security updates. Even for Android devices or Windows desktops, you keep getting a lot of security updates. Why the organizations provide those updates? So they identified certain bugs in their own software, so they want to fix it as early as possible. So if you implement a ERP which don't provide these kind of services, at one point of time, there will be a risk that the product itself will put you in risk because you are using an outdated software. Enhancement updates, the same thing. So it needs to be give a frequent updates so that the product is free of bugs. Application portfolio management, as I said, ensure that careful evaluation is required to reduce duplication and complexity. So don't implement everything what is there in the software. Implement what is there, what is you needed it. So from the implementation side, the risks what it has, it becomes lengthy implementation. So sometimes the project might go for a longer terms. What happens if the project is taken too much of time? The business people might lose interest. The actual employees might go for a change. So who initially given requirements, they keep changing it. It's very difficult to complete project. Ensure that. That's the reason I said whenever we go for implementation, we go with a strict timelines. It has a definitive start date, definitive end date. We will be under tremendous pressure to finish the project on time to ensure all these risks will not arise. So insufficient funding. Initially, business says that let's start, we'll fund the project. But in some between, like as far as the project goes, they might say that, hey, we don't have funds, so let's stop the project. So ensure that all the necessary funds, not only for implementation and for contingencies also you need to maintain so that the project will not get stopped in between. And also from the data safety point of view. So only one set of data. If data lost, whole business may come to standstill. As we talked about centralized database, right? How you can mitigate. You should have, this is one of the backup tool. Backup management needs to be there so that every day all your data from the ERP will be copied in a separate place so that if something happens to your software, at least your data is available to continue your operations. Speed of operations. So centralized data storage and management, as the data size increases, reduce the speed of operation. So if more data, like how your mobile phone, if you too much data, it reduces that operation, right? Like it becomes slow. Similarly, ERPs also, you need to manage the data effectively, else it will burden the system. Either you increase the hardware capacity or you have a parallel processing processors so that enough resources are available to work your software. So system failure, ensure that, yeah, basically they are saying in case of failure of the system, the whole business may get affected. This is the risk. So ensuring the same, it's a kind of continuation of the previous topic. Ensure the data backups and alternate system in case something fails. Data access. So this is what I'm talking about, one of the risks. So only ensure that the role-based access controls, we are going to talk about that, RBAC. So I will explain you in detail what is RBAC so that you will understand how you can ensure that no unauthorized people will get access. Only and also the level of information also be given as per their job role. So like this, you can ensure the data safety as well. Post implementation, you might think that only the risks happen while the software is being implemented. No, even post implementation side also sometimes the risk can happen. So it's a lifelong commitment to the business who actually taken that product. So new modules or new functions should be installed, new users to be trained, or new technologies to be embraced. So previously you might have some on-premise installed application. Now your ERP gone to cloud-based. So you yourself have to upgrade to cloud-based. All your integrated systems have to upgrade. So it's not that I successfully implemented the ERP so that I don't have any issues. No, it's a lifelong commitment. So it requires a strong commitment and consistency by the management to ensure that the product is working fine. So these are the various risks of the ERP implementation. Just read through once again because these are not that technical points to explain you. So that's the reason I went a little faster. But if you have any doubts, feel free to ask me. So the next topic is role-based access controls, but I will give you a short break. Now it's 7:38, right? Let's meet at, I'll give you a 10 minutes break, 7:48 or 7:50. We'll catch up at 7:50 and continue our discussion. Okay. Thank you, students. Let's take a quick break of 10 minutes. If you have any questions, post it on the chat window. I'll review them and clarify them. Let's take a break of 10 minutes and then we can continue. Technical team, let's take a break. Welcome back, students. I hope you're all back. So there is a query there by Saipa Virali. Samriddhi Ranjan. Please tell us about BPR, Business Process Reengineering. Okay. See, this simple in simple terms, before implementation of software, okay, in your organization, so the employees used to complete a particular task in their own way or in a particular way. Sometimes what happens post implementation of these softwares, basically these softwares not only perform as per your existing process, sometimes they can improvise your process or better your process by suggesting the standard process, because the ERPs are being used by the users across globe, right? So they will give some suggestions, okay, or else you have to do in this way. Some certain cases you need to change the way you are doing process. So what happens in such case? You need to, means this is what they're saying, it's a overhauling, means it's a kind of repair of the organization structures, your systems or a job descriptions. All this stuff need to be rechanged. Example, to further understand, let's say previously there is one accountant in the GL department. What he used to do, he only create the entry, he only post it. Okay, so but as part of ERP implementation, there is a possibility that in the previous software there is no such kind of possibility. Okay, it continued it, so he enjoyed that privilege, because sometimes he enters the entry, he himself modified the entry in the way he want. Okay, it's a risk actually. Whereas in ERP there is an option. Okay, that's what we're going to discuss about role-based access controls. Let's say in your organization you have two people, one is manager, the another one is accountant in the finance department. So what happens once you implement the ERP, you can give an access of journals creation. Okay, this person, he can only create the journals. Once he creates, he cannot update or he cannot post the entry. Okay, this access can be given to the manager. What he can do, he can review the entry. If everything is fine, he will post it. Okay, so like this, the way they use it to perform can sometimes go for a change, considering the best practices in the business. So at that point of time, the roles, the org structures, they might go for a change. Org structure is nothing but the job, the hierarchy, like accountant or a senior accountant or a manager or something like that. You can elaborate it further. Okay, so this is what they're saying. I hope you understand now. Business process reengineering, sometimes you have to redefine the way you use it to do the process. Now let's get into the role-based access control. See, we were talking about one of the risk, right? Central database. When we are talking about, sometimes there is a risk that if we give access to the unrelated people, he might enter wrong data or they might misuse the data. How to control it? By creating the role-based. Role is nothing but the job. In simple terms, you have hired for that person in a purchasing department, give access only to the purchasing module. Also within that module, what are all the things he can do, you can further restrict him. Okay, it's not that I'm giving a key so that you can enter into the room and take whatever you want. Basically what I have done, within that room I have made everything like a locker. You can visualize in a bank how the lockers will be. Once I enter into the room, there will be small boxes. So based on my need, okay, only I will give 1 or 2 locks to him, so he can open and take what he wants. So similarly in the ERP application also, I will not give access to every functionality. I will give very limited access based on his role. What he is supposed to do that activity, what he need access, I will give. Okay, I will show you in live how that happens. But right now, just understand concept wise, role-based access control means based on the job you do, I will give access. So these, they classified broadly into 2: mandatory, discretionary access control. As the name suggests, mandatory means it applies to everybody. Example, in the organization, let's say the pen drives are not allowed to use in your laptops or desktops. It's a mandate. For all others, it is restricted. Certain organizations, I saw that they won't give access to the internet. They might think that employees might waste their time in accessing internet or so a lot of websites or whatsoever it is. Sometimes there is a chance that they might mistakenly download some documents or softwares which can infect the organization networks. So they don't give internet access, but there might be some people in the organization who requires internet access, so they can give that access on a special permission. So this is what they're talking about, mandatory access controls. Whereas discretionary access controls means basically it depends on their policies, right? Who can define what, who can access what. So this is what I would like to give an example. What connection problem? Samriddhi, I didn't understand your query. Connection problem. Okay, are you saying that the video or audio is not good? But I'm not hearing any other complaints from anyone. So please check your connectivity once. So on the discretionary access control, what is meant by this? Let's say I have in the finance department, as I said you in the earlier, there is a manager, there is an accountant. So usually when we go for implementation, class, I'm not taking multi-layers. I'm just taking a 3 simple example. Okay, we say that super user, manager, user, inquiry. Okay, let's say the person, the employee who got inquiry access, he can only view the data. He cannot do anything. He cannot enter. He cannot alter. The person with user level access, he can enter the data, but he cannot alter the data. Super user, he can alter the data. Manager, he will have beyond super user. Maybe some additional functionality also can be given. Okay, let's say I will show you a live here. If you see this application, just a minute. Sorry. If you see this application, general ledger, I'm just reading it for the students who are not able to view. The same module, general ledger is a module. There you have a user as well as super user. I will be showing what kind of access they have. Example, if I go to user, he can create journals, only he can enter. Okay, beyond that, he cannot do anything. Whereas there is a access called super user. If you see here, he can do many things. Even the number of options you are seeing on the screen are more. That depends on the role. Let's say if a X person joined as an accountant, I will give user access. If a Y person joined as a senior accountant, I will give super user access. So like this, based on the role, the access will be given in the application. Okay, this is what role-based access control. So again, types of access, as I said, somebody will be given an access of creation. Somebody can only view, somebody can alter it, somebody can print it. I can control it as per the job roles in simple terms. Okay. Now we are getting into the final topic, audit of ERP systems. So final topic means from day 1 pending, but day 2, don't worry. I have taken enough time in explaining in setting the ground. We can quickly go through the day two topics. Don't worry that I haven't started. Actually, I have utilized the time in starting of the session itself to set the ground. So when it comes to finally audit of ERP systems, so you can go for it. And like example, as part of audit, you might go for a company where that company is using an ERP application. So then what kind of controls you need to check? This is very much important from auditor perspective. So basically, see, in financial audit, what is your role? You ensure that the financial statements are representing true and fair view, right? How you ensure? You ensure that all the numbers they quoted are there, having supporting documents or not, proper controls are there or not to tamper those documents, and all the proper accounting principles are followed in preparation of those financial statements. So these are all the things you check in a financial audit. When go for at the same time, nowadays, if you see, all those financial statements are prepared using these systems. So you should first ensure that whether these systems are accurate or not. Okay. So how you check it? So you need to understand what kind of controls usually the ERP systems have. So they talk about general controls, application controls. Let me put all those stuff. So general controls means in general, how organization is taking care of their IT infrastructure, whether anybody can go and put their pen drive and take the data. You might have viewed in a lot of movies. So the hero will come into the villain building. He takes all the data from the villain and then go off, or the opposite, vice versa. Villain comes to bank, keep his pen drive. So it's not that easy in real times. So they don't accept all those third-party devices, simply give somebody to take the data, right? So usually how you're protecting your infrastructure, that takes care of the general controls. Okay. Whereas application controls in specific to application, example, in the previous case on the role-based access control, we were talking about user versus super user, right? User will be given an access of only entry. He can create the journals. Once he create, he cannot do anything. If he want to modify it, he has to go back to his manager or a senior accountant. Hey, I have done a wrong entry. Can you please reverse the entry or cancel the entry? Something like that, he can do it. So these application controls means individual business process or application level controls. Okay. So these are the broader classification of general controls, application controls. Again, under general, they have given management controls. So they deals with organizations, policies, procedures, planning, and so on. Basically, as I told you, very high level, what is the organization policy, how they take care of their systems, how they take care of, example, let's say one new employee comes, how the access will be given. It will simply they give access to any person who is joined. No, right? There should be a definitive process or a policy. Let's say if this person is joined in accounts department at this role, this is the level of access. But the actual implementation happens through this application controls, but the process, all the guidelines, everything should be managed by these general controls. At the same time, environmental controls, basically how you're safeguarding your computer systems. We talked about the disaster recovery, backup systems. So all those things are environmental controls. So once you understand these are all the controls that should exist, then when you go for an audit, you can check whether these controls are there in that organization or not. So these are all the controls in ERP. Again, they further went into auditing aspects of ERP. So when you are auditing it, you might audit the data as well as the process. So when you're auditing the data, your main focus is whether the data can somebody unauthorized person can edit it or not. So you will be checking on need to know, need to basis, how much he is supposed to know, how much he is supposed to do. Based on that only the access should be there. Remember the examples of one of the employee from purchasing department is accessing the salaries of his colleagues. So does he need it? No, right? So those kind of things you need to check. And also the physical safety, the data, how they are protecting it. Let's say we talked about take a backup. Okay. Organizations are maintaining the daily backups, everyday transaction data. They are copying into a different hard disk and storing very safely. But unfortunately, what happened? The main server where the data is actually stored and also the backup hard disk, they both are keeping in the same place. Okay. Let's say if a flood happens or if a fire accident happens, main hard disk, main system, as well as the backup system, both will get corrupted. So what is the point of having the backup system? So it's not that having the control only, the control should also be effective and efficient. So as part of audit, you will be checking the physical safety of the data as well as the logical safety of the data, who can access what they can do. Now, from the process perspective, functional audit, basically, I'll give you an example. So when the systems auditor comes, I was part of many systems audit. So, but I was on the other side. I won't do the audit. There will be a person from audit department. They will come as we are from the product side. We will assist them to do the audit. So they will check whether system allows, if some transaction is already posted, whether somebody can edit it, somebody can delete it, something like that. They will check. And also they will check the classic example of the functional audit is, I told you, right? Three-way match. So we told to the auditor, sir, our system will not allow the payment to the supplier if the item is not received. Because without receiving an item, why should I pay the amount to the supplier? You might think about advance payments. Advance payments are always exception. So in general, if it is not an advance payment, unless I receive the material from the supplier, I should not pay. Okay, this is the control. So whether system is having that control or not, they will check. So they will create a purchase order for 100 quantity. They will create a receipt of 50 quantity, and they will create an invoice of 100 quantity. Now system will stop. Hey, you ordered 100, I'm fine, but you received only 50. So I will allow the invoice only for 50. So this is the control usually many of the businesses maintains. So they will create a test data and test it whether the process is working fine and the controls are there in the system or not. This is what as part of the systems audit. See, so far as part of articles you might be involved in a lot of stock audit or a financial audit, but when it comes to the system audit, this is how they test the system, whether the system is having all the controls or not. Okay, input validations, checking of rules for input of data. I told you, right? Let's say one particular sale price, one item sale price, you already maintain the data. You don't give the freedom of entry the sale price. See, if you give for every item, the salesperson can enter the sale rate. What is the risk? Let's say his friend came to buy that item. Instead of 100 rupees, he might give for 80. There is a risk, right? Company will lose the revenue. So that is the reason the prices are fixed. That will be derived from the item master, the sale price master. Okay. So if at all, if you want to give any discount, there should be certain controls to it. So that is how they validate all these things as part of audit. So very logical to understand. I don't see much complexity in these topics. Okay. So this is what so far from day one topics, the basics of before we get into ERP. In day one of class, we understand all the functional concepts. Now so far we discussed about the ERP, how the modules are integrated, what are all the risks in implementation of ERP, and from the controls and audit perspective. Great. Okay, there is a question from Samriddhi. Application controls generally from front end or a back end? Basically, they are from front end, Samriddhi. Application controls means from front end. See, backend also will be there, but predominantly as part of audit, they test the front end only because backend access is very restricted. So they will check that as well. So I hope you're good with all these concepts. Without further delay, let's get into the rest of the topics. Yeah, see. Actual day two topic is business process modules and their integration with financial and accounting system. So for this, the background, what we discussed, a business process. P2P is a business process. O2C is a business process. Hire to record to report. Like this, there are so many processes in the organization. So these are all the classic examples of business process. Just read through the definition. If requires any explanation, I will give you, or else we'll move on to the next topic. So business process consist of, as we spend good amount of time on P2P and O2C, just always recollect those things. So it consists of set of activities that are performed in coordination in an organizational and technical environment. So these activities jointly realize a business goal. Okay. I started with an example, business want to make profit. It's a goal. How that goal can be achieved? By purchase and sale, right? So how the purchase activity is done, we saw the P2P process where different departments coordinate with each other, both outside world as well as in the system. System also somebody create a purchase order, somebody create a GR and goods receipt note, and then somebody create an invoice, and finally somebody create a payment, right? So outside as well as in the system, they coordinate and finally derive the business goal. So once the P2P process completes, the material is with the organization. The next process is either they will do value addition process or they directly sell to the customer. So finally, they will be able to make money out of it. So that's what the business process means. So to manage a business process, first you need to define it. So we already done it. What is meant by P2P? Okay, this involves define the tasks or steps in the process and mapping the tasks to the roles involved in the process. As I said, let's say in P2P process, from the procurement side, the purchasing department will be taken care. From the receipt of material side, inventory department will be taken care. From the invoice processing and payment side, the finance department will be taken care. So again, not only the department, the respective person is also identified in the process in the organization, so that always this person will be taking care of this kind of activity. So this is what the first step. The second thing, establish performance measures that creates a basis to improve the process. So you might have heard about key performance indicator, KPIs. Okay, so what happens in the organization? So let's say for an payable department invoicing guy, for this guy, the KPI is, they will check, the KPI is how much time he took to book an invoice and how accurately he's making the payments on time. So this is his KPI. So as and when he got the invoices, so they will see the invoice date as well as the invoice creation date. Let's say if the invoice come from the supplier on 1st April, if he is creating on 11th April, he took 11 days to create the invoice in the system. So there will be a report which track this 11 days by time. Okay, so that at the period end, the payable manager, he will check this KPIs, all these performance measures. Hey, why you took 11 days of time just to record an invoice? The invoice is having a date of 1st April, but in the system it have been created on 11th April. So then he will explain, sir, even though the invoice date is 1st April, supplier sends the physical invoice to us on 10th April. So that's the reason I could able to book it only on 11th April. There could be various examples that you can visualize. I'm just giving it. So not only having the steps and also identifying the persons, establish the performance measures so that you can evaluate if there is any improvement needed on the performance. So organizational setup that enables the standardization and adherence to the process throughout the organization. As I said, so not only identifying the departments, also identify the individual role who actually does that job. So this job will be done by the payable accountant. This will be reviewed by the payables manager, so that whoever comes and goes, the process is standard, so that any new employee comes, he can also easily accommodate. So basically, in organizations, to do this, we prepare a document called SOPs. You might have heard about this terminology, standard operating procedures. Means how to perform a certain activity is a laid down. Who means, see, in companies, employees keep coming and keep going, right? So if you don't document it, the person who comes newly, he might be doing in his own way. Whether good or bad, that's a different thing. But there will be a change in the way the things have been done. So that's the reason you should have a process which is documented. If a new employee comes, the first thing you need to do, hand over the document to them. Hey, this is the job you joined. Read through the SOP document and follow the same steps when you are doing the things, so that the standardization is established. So this is what business process. You must define it. You must establish the performance measures so that you can evaluate whether it requires any improvement or not. And finally, you need to have this organizational setup, a proper way of doing things. By ensuring this, you can deliver the process properly, and finally, you can help the business to achieve its goal. SOP, Mukta, SOP means standard operating procedure, means how to do a certain activity in a specific way. Let me give you, okay, let's take a dish. You like a particular dish from your mother. Your mother knows how to cook it. She might have told you orally. Based on it, you tried cooking it. Sometimes it may come well, sometimes it may not, because you are not experienced, or even though you are experienced, the same job will be done by different people differently, right? There could be some possibility of difference. Okay. Instead of it, if your mother has given all the ingredients with the quantity, with the process. You first do this, second do this, third step this. So if she has given this recipe in detail, almost there is a possibility that you achieve the same result, right or not? Okay, even though the same job is done by two different persons, since you are following a document with a series of steps and guidelines, there is a possibility that the standardization is maintained. Okay, so this is what standard operating procedures. Okay, there is also one more question from Jasprit. KPI, key performance indicators, means how you measure whether you are doing well or not, right? So there should be some measurement. Example, you are like, why you need examinations for that matter? See, whoever studies CA, we will call them as a chartered accountant. That's it. Why you need exams? So there should be a mechanism to measure your level of knowledge, your application of knowledge, your all the skill set that is needed once you qualify and get into market. So there should be some way to measure it. So when you say I studied CA, I have all the knowledge, but the other organizations, outside people can believe only if you have some documentary evidence, right? So that's a performance measure for you to say yourself as a chartered accountant. You have a membership certificate which confirms that yes, this person has passed. That means he has all the requisite knowledge a chartered accountant should have. Similarly, in organizations also, if somebody is doing their job, how you evaluate that person is doing well or not? Okay, you need to have some measurements. So the example I have taken, in the payable department, there is a person whose job is ensuring that enter the supplier invoices into the system and pay to the suppliers on time. This is very critical. Don't think it's a very simple process. I see a lot of issues in this area, because if you don't pay on time to your suppliers, there is a big loss of means respect. So you will lose your goodwill in the market, saying that, hey, if you supply material to this company, they will not pay money on time. So next time when any new supplier will come and give material to you, if this is the kind of goodwill you get, no, right? So you need to identify if these kind of issues are happening or not. So you need to identify by placing some measurements. So what I do, I always keep check. So as a payables manager example, I will check how much time my team is taking to enter the invoice, and how out of the payments they made in a month, are they making on time as per the due date or not? So to measure all these things, I will have certain measurements. So that is what KPIs. Yeah, SOP is kind of guidelines, Pooja. Yes, you can say it in simple terms. So now we understand the business process. Business process flow, it's an extension of business process. So here they've taken an example of accounting. Okay, there is a document, somebody posted a journal, and then ledger, trial balance, adjustments. Finally, how it reached to financial statement is what they have given. But we have discussed the length and breadth on OTC, O2C, order to cash, procure to pay, record to report. Record to report, I think you have already had all these things in day one. But again, we spend good amount of time. So I'm not spending any further time on this. Okay. So now you understand there are business processes in the organization. To manage this business process, you need to have the modules in the ERP software. So before we get into it, so they classified, this is what even a couple of times I was keep repeating, right? In accounting language, if you talk about any account that should fall in personal, real, nominal. Similarly, if you visualize any business, that either that should fall in trading or manufacturing or service. Can you think of any business which is not form part of these three? Students, please respond quickly. Can you think of any business which is not form part of these three? It should not be a trading, it should not be a manufacturing, it should not be a service business. Can you think of any business which is not falling under these three categories? Students, I was waiting for your responses. See, if you respond only, then I'll come to know that you are following. Sonika, what do you mean by tailoring? I didn't understand. So I got a lot of responses from Saipa, Virali, Nosar, Vinay, Shruti, Himanshu. Absolutely. You think of any business that definitely should fall in either of these three categories. Either it should be trading business, purchasing and selling is your business, or it should be a manufacturing business. You buy raw material, do some processing, create a product and sell it. Or it could be a service business. Example, chartered accountant in practice, lawyers in practice, doctors, all of them belongs to, they deliver services, not any products. So if you understand these three categories, then it will be easy to understand why we are going with a modular design. Okay. Again, this point also we have discussed. Let's say ERPs have the entire software. It gives a lot of functionalities considering by different businesses. See, when they develop the software, they don't keep in mind my software is only used by trading or only used by manufacturing or only by service business. They created the software as a general purpose software. Anybody can use it. Okay. So what they have done in the Oracle example I have given, around 130 plus modules are there in the ERP application, but not everybody need every module or every functionality. When I say module, you understand it as a functionality or a feature. Not all the features are needed by everybody because sometimes they charge based on the modules or features. The cost of the product is dependent on the features. So that is also very much important to business. Why I have to pay for the things which I don't need it? Okay, there is an option for you. Buy only what you need. Don't pay for everything as a blanket. Okay. And one is cost. The second important factor is complexity. Okay. See, even if you're installing certain softwares, they will ask you only the components which you need will get installed now. For the other components, you can uncheck the installation so that it will not install everything. If you're installing everything what is there in the software, it wastages your hard disk. It's wastages your RAM, means the running, the capabilities, the processing capacity, all those things get wasted. Similarly for ERPs also, it's not that, okay, even though he don't charge, if I'm installing everything, that will burden your system, unnecessarily wastage of your resources. So maintenance also is a difficult. Sometimes that increases the complexity of process doing also. So first and foremost, if you are implementing an ERP, you need to understand in which category of business you are falling in. If it is a trading, all you need is a module to manage your purchase process, a module to manage your sale process, and to record all these things, you need some financial modules. So that means to manage your supplier, customer, your assets related stuff, so that you can accordingly implement the ERP based on your business process. So that is the reason we are coming in this direction. Understand that kind of business and accordingly take the modules. Now, finally, we are getting into the functional modules of ERP. So as I said, ERPs, the functionalities are divided by process wise. So in your syllabus, again, if you see here, how many modules they are talking here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So they have given in your syllabus only 11 modules. But trust me, 11 modules are the most of the modules very generally used by the people. But as I said, there could be 100 plus modules. And especially all this terminology they used here are from SAP product. Okay. Tomorrow you are going to a business to audit it. They might be using Microsoft Dynamics. Then there is no guarantee that they use the same terminology. Okay, there is a chance that the terminology might go for a change, but the underlying concepts or a process are same. As I said in the email example, you might be using Gmail, your friend might be using Yahoo, but when it comes to the purpose, both does the job. Receive the email, send an email. Similarly, so you might call with a different names, but ultimately that module gives the same functionality. If I say production planning, this module helps me in planning my production. Anyway, we will discuss about each module. Don't worry about it. So these are all the modules you will have in an ERP, and especially from your syllabus perspective, they have given these 11 modules only. Let us quickly run through each module and what is its capability. So the first and foremost is financial and accounting financial module. So this module helps to take care of your financial data. Okay. Basically, you need to understand the general ledger and all the accounts payable, accounts receivable, your asset accounting, your integration with subledgers. So this will be managed in financial and accounting module. Let me draw a diagram so that you will understand this. Okay, we are almost close to 8:30. Just students, if you allow me, I'll take some 10-15 minutes more so that we can complete at least these topics. Okay, the rest of the integration maybe we can discuss tomorrow and then continue with the day 3. Let me explain you this so that it's easy to follow. So we understand that there is a business and you will have multiple departments in it. Each department does their own job. So let's take about finance, purchase department, HR department, manufacturing department, like this, right? The finance department again will have a lot of classifications. So they are the persons who will take care of the supplier related payments, the customer related ones, all the reporting. Means preparation of financial statement is their job. So this reporting is done through general ledger module. Okay. And what else? Yeah, assets. All the assets management is taken care by the finance department. See, when I say assets, not the physical maintenance. So that is done by the plant maintenance team. There is a plant maintenance team, P&M. So that department will take care of it. But the finance part of it means what should be the cost, what should be the depreciation should be charged as per accounting, and what is the written down. If something it has to be write off, how much you have to write off, all those stuff is managed in asset module. So each module is designed to manage certain set of process. So based on these departments, the modules are implemented. So they are talking about the finance, financial accounting module, which helps you to manage all these kind of activities. So you can define, see, it should be, see, basically, I have to explain the way you implement it. But since we are limiting our discussion to the examination perspective or this knowledge purpose, just understand that the ERPs will have a modules and each module is designated for a certain purpose. Under that, financial module is managed to maintain your accounting, your accounts payable, accounts receivable, asset related accounting, and also this is integrated with other subledgers, because at the end you need to generate trial balance meet. All the data should come to the general ledger module so that you can generate your trial balance and financial statements. So that's how it is integrated with other subledgers. Then controlling module, as the name suggests, controlling module basically to control your cost. So how to control it? First, you need to understand how much it is incurring, right? To identify how much cost it is incurring, you have various sub modules or certain features in the controlling module. Cost element accounting, by expense headwise, you can identify how much cost it is happening, so that, okay, this is the expected cost or a budgeted cost, but whereas the actual cost is this much. So it is going above or it is going below or it is going on par. All those evaluations you can do with this controlling module. So this module helps you basically, as they rightly said, it analyzes the actual figures with the planned data so that you can plan your business strategies. So if you know, this is what my expected cost, but this is what the actual cost, so that either I have to improve the process so that I can bring the cost down. So to do all those analysis, you need the data. That data will be given by the controlling module. So here you can do different kinds of costing. In costing, you might have read about activity-based costing. There are different ways to get that costing, right? Product-based costing, by product-wise, by activity-wise. So internal order, again, is a technical concept. So where you accumulate all the cost for an activity and then decide how much cost is incurred for that activity. When I say, I don't use the activity term, I use the event. Let's say company is spending certain amounts for a particular event. If they want to track all the cost that is incurred to conduct that event, they can create one internal order in the system. Internal order is nothing but a specific element, you can say. So whenever they're booking an invoices or expenses, so you always select this internal order so that all the cost will go to that internal order. Finally, once the event completes, you can check how much cost is incurred for this internal order. Sorry, just a minute. Yeah. So product costing, as I said, how much cost, product cost, how much cost is incurring for a product, and also it will help you to do the profitability analysis. Basically, the controlling, the name suggests control. Basically, you control the cost. So to give all those inputs, you can use controlling module. The sales and distribution module is used by the sales department. Basically, they to do these activities, to pre-sales activities. So before sales, do you think any activities done by the organization? Absolutely yes. The sales order to cash cycle will not start from sales order. Basically, it starts from quotation. Customer comes and asks, hey, I need this product. Can you give me a quote? How much you cost? How much you means at what cost you can sell for me? So these are all form part of pre-sales activities. Quotation. Okay, that quotation can be created here. Okay, customer has asked so and so item, so and so quantity, and we are quoting, let's say I am quoting 1,000 rupees for that item. So that is as part of pre-sale activity. The quotation will be sent to the customer. If customer accepts it, then that will be converted into sales order. Now customer said, okay, I'm okay to take at this price. So please deliver me this much of quantity by this much of time. So once the sales order has been created, this is a regular process, our regular O2C cycle. So to manage this, you need to have sales and distribution module. Okay. Muktavya's second point. Are you talking about these features? Assigning organizational units is what your question, Mukta? Yeah, if this is your question, see, assigning organizational unit means even in sales module, you will have organizational structure. What is the sales org? You might have some distribution channels. Okay, all these things, this structure you need to build it. Okay, then you might have some go downs. So this structure or assignment is also can be done using this module. Once you build the structure so that you can track all the transactions between these organizational units. So pricing components, as I told you, at what price this item should be sold. So all those things, setting up sales document types, billing types, tax related components, customer master data. See, don't read it as a text from the book. Just think, because we explained in detail, right? What a sales department does to do their job. You need a software to manage it. So the first thing you need to understand, not from ERP to business, come from business to ERP. Business does these jobs. To manage that job, I need a product to support. So first you need to understand what a typical sales department does in an organization. So all those things are being supported by these products. Okay, assessment, we can take it a little later. Let us quickly finish the modules part. So the human resource module, as the name suggests, this module will help you to manage all your employee related activities, the employee name, employee address, your employee salary structure, and employee bank account details to send salaries to the employees. So all these things are employee positions, like at what position he joined. So if you see, these are all the things. If you are paying the employees based on time, so you need to record how much time employee is booking against a task. So all these activities to manage, you need a human resource module, starting from hiring a person till his resignation from the company. His entire life cycle management is managed by human resource module. Then production planning module. So as the name suggests, in production planning, this module helps the organization to plan their production. So you can ask me, what is meant by planning, sir? Let's say you got a customer order. He said, I need 1,000 units of cars by next 1 month. Okay. So the sales department is very happy because they got a big order from the customer for 1,000 cars. See, in a 1 month time. So they are happy because their targets are met. But whether that can be delivered or not, who can confirm? How to check, right? So you need to check with the inventory department. That's part you can check. So now the sales guy came, hey, I got a big order for 1,000 cars to be delivered in the next 1 month. So can we deliver or not? So immediately he will check the inventory guy, how many cars are there on the factory. So they say, sir, we only have a 700 car stock. The remaining 300 cars need to be manufactured. So now the question goes to the manufacturing department. Whether can we make these 300 cars in the next 1 month or not? So for them to check whether that is possible or not, they need to have a module to tell whether the plant has that capacity or not. The first thing. Second thing, plant currently what are all the orders? They're already doing it. See, it's not that they're waiting for this order, right? The factory might be running continuously to deliver for other customer orders. So they need to check whether what is the plant capacity, how much we really can produce, and especially given the timeline of that 1 month, considering the current orders, my plant capacity, my raw material availability, I need to consider all these things to commit to the customer whether I can deliver it or not. So to do this job, this production module will help you. So if you see there, couple of plannings you can do using this sales and operations planning. So ability to forecast sales based on past and current and future data. So this module have a functionality to forecast sales, how much sales I can make considering my past data. At the same time, my resource planning, production planning, material requirement planning, capacity planning, all these things are form part of my example. Remember the example, you got an order to produce the 300 cars, whether my plant capacity is there or not. So this module will help you to give, hey, you already producing for other customers. So you can only produce 100 cars out of 300 based on the available capacity. So to get all this information, this module is the perfect choice for the companies. Now students, tell me whether this module is needed for a trading guy. If the guy is just buying and selling goods, did he need this production planning module? Just say yes or no. So I would like to understand from you whether a production planning module is needed or not for a trading business. Yukti, Himanshu, you rightly mentioned yes. So this is what I'm saying. You might have so many functionalities or modules, but you don't need everything. Based on your business process, you can select the modules what you want. That's why ERPs are called modular design. Remember the term modular design means you can select the functionality which you want. So don't worry, students, I'll finish within 5-10 minutes. It's very easy to just understand because I don't want the disjoint from the examples and amount of time we spend to understand the process. So I just want to have a logical conclusion. Material management module. Remember the P2P process. Remember the purchasing department. For them, the material management module is needed. Basically, material management is a combination of purchasing and your inventory department. So to procure the material, to store the material, you need a material management module. You can definitely read through it. If you have any doubts of any module, in our next class, we can discuss further. So then quality management module. This module basically helps you to check, see, I'm ordering certain material from my supplier, whether that material is quality point of view, whether it is accurate or not, how you can check. So this module help you or gives you the functionality so that in the software you can enter when you're receiving you can define all the metrics. okay, this should be like there could be certain, depends on the product, you will have some metrics, right? It should have this much of thinness, this much of thickness, or this much, it shouldn't have any bends. If it is an automobile, it should have this much, means the sheets, the steel sheets or iron sheets should have this much of thickness. And especially automobile industry is very precision, means very accurate you should have, or else the fitting will not happen properly. So all those parameters you can define in the quality module. Whenever you are receiving the product, using this functionality, you can evaluate whether that raw material is as per the standards or not. Similarly, this module can be extended to your finished products as well. Once you produce or as part of the process, you can evaluate from the quality perspective whether all those products are as per the module. As the name suggests, if you are a manufacturing organization, you will have a lot of plant and machinery. So you need to have, let's say, whether the plant requires any maintenance or not. It's not something like in your home, right? If I don't do service for an electronic appliance, you're okay, cool. But in factories, you can't leave it like that. Those machineries should be repaired or serviced on a frequent basis. If not maintained, the machine will get a breakdown, so that the entire production will get lapsed, right? So to manage your plant and machinery, you need to have this plant maintenance module. So in this module, you can track, these are all the assets I have, these are all the maintenance schedules. Based on the maintenance schedule, I will check whether all my plants or machinery are serviced properly or on a frequent basis or not. So this module helps you to achieve a minimum breakdown, optimum capacity, and also ensure that availability of machines. So this kind of information can be fetched from the plant maintenance module. Again, students, this module is not needed by a trading business because they don't have the factories at all. So they don't need plant maintenance module. So they're just given what are all the operations that can be done using this module. Another one, project systems module. If your organization is involved in doing some projects, okay, when I say projects, typically very easily you can correlate to construction industry. So they build one apartment here or a big gated community there. So that can be called as a project. So to manage the entire project, the life cycle, budgets, kind of events in a project. So this module, you have the material management module, the sales and distribution module. If you are a manufacturing organization, that manufacturing module also form part of the supply chain module. So if you see here, to manage this entire process, you need those modules. So there is no specific module called supply chain. Basically, supply chain is a broader term. You will have material management, sales and distribution, and manufacturing name. The last one, customer relationship management. As the name suggests, this module is basically needed both for trading and manufacturing, even for service. To manage your customers, you will have a separate module. You might have asked, like, what is there to manage the customers? The moment I got an order, I will deliver the material. Definitely no. You need to pamper your customers so that they will stick with you and they will bring more customers. So to pamper and ensure that the customer will not leave you, to what are all the things you need to do? You have to ensure the healthy relationship. Okay. How to find a new customers, ensuring that the existing customers will not go, and also maintain the entire data relating to the customer. So all these things can be managed in the customer relationship module. If you see here, okay, they just explain the benefits of it. Once you have it, how you can improve the customer relationships. See, basically, once this you can see in the audio, like e-commerce platforms also. If you are browsing some items on the e-commerce platform, on the bottom of the page, they will recommend customers who bought this product also bought this product. So how they can do that? And also based on your previous search history, they will recommend the items. So all these things are form part of their CRM modules. So these keep track of what you do, what you perform, what you search on their platforms, so that they can keep pushing more and more products and you buy more products, and ensuring that your experience on their platform is much greater. So upselling and cross-selling is the example I have told you. So it also help you for promptly, timely communication and optimize the marketing part. So if you know the customer needs and behavior, you can accordingly curate the advertisements or mailers so that they'll be interested in your related products. Okay, so this is what I would like to cover for today. So I know that I have gone a little faster on the modules part, but I have a genuine reason because, as I told you, don't read it from the ERP to the business. So think from a business side, understand that each department, what it does and how this module will help them. So if you combine in this direction, you can easily correlate each module. So ERPs are arised because of business, not because that ERPs exist, businesses are doing it, right? So just change your dimension of thinking so that it will be very easy to understand. And there are certain technical terms I do understand in explaining those modules, but unless that application is open and you have been showed that functionality, still that will be a theory part for you. But no worries, go through those modules part once again. On day 3, if you have any doubts, feel free to ask me. We can cover it up. And this integration with other modules is very small topic. When I say small topic, really small topic. 5-10 minutes we can finish it and then quickly go to the day 3 topics. Okay, so students, if you have any doubts, I'll be okay to wait for 5 minutes. If not, we can wind up the session. So let me know if you have any questions. Technical issue, I'm not getting any technical related challenges. Basically, our technical team will also be simultaneously checking the any issues if there are any. Okay, there is a question from Samriddhi. Which businesses usually take the project modules? As I said, it's not that trading or a manufacturing or a service. Could be any business, okay, but who usually run by projects. Okay, let me take an example of software industry. Okay, it's a service industry, right? From category wise, trading, manufacturing, service, the software industries comes under the category of service industry. But in software companies, every client is a project for us. Okay, when we got a client or when we got a business, we call them as a project. We got a project that we need to implement the software for them. For us, it's a project, even though we are into service, especially on the software industry. So I think I clarified your doubt. So if you have anything, just let me know. Okay, Sonika, please, she was asking, please repeat supply chain module is a combination of certain modules you said. Absolutely. Let me read through the first one. See, supply chain, okay. Forget about the text and everything. Just read through this. Starting from raw material procurement means it's a combination from the process perspective. It's a combination of P2P, O2C. Okay. So procuring to till delivery, whatever business does, all those operations are managed by supply chain module. That means supply chain module should consist of procurement of material, your inventory. If you are a manufacturing organization, it should have the manufacturing module. Then finally, the shipments and the billing part. So it's a broader term. If you go to any application, there is no specific module called supply chain. When I say supply chain, all these modules together is called supply chain. Okay, that's what I mean here. Okay, Saiba, module means it's a functionality. In simple terms, functionality. I showed in the diagram, right? Let me show you quickly. If you see here, this is an Oracle application where I have different modules. Where I have different modules, like I'm not sure, but I can't enlarge the screen. General ledger is a module. If I logged into that screen, I can perform only the activities relating to general ledger module. If I log into purchasing, I can able to create a purchase order. I can create a goods receipt note. But if I want to create a customer invoice or a supplier invoice, I cannot do this in this module. I have to go to payable modules. Okay, accounts payable module, where I can create a supplier invoice and also process the payment. If I want to create a customer invoice, I will go to receivables module. Module in simple terms, functionality or some piece of software. In the major software of ERP, some part of software. In a bigger bank, visualize it as a lockers. So you enter into the locker room, but you will have separate boxes where everybody stores their own individual data, right? Similarly, modules are as per the process wise in simple terms. Okay, in last day, we will see about the examination, at least 1 or 2 examination question papers on this chapter to understand how the questions are coming, how you have to answer it. So examination just hold for the last class. Anything else? CRM is used by every business. Of course, it is needed, but again, the cost benefit analysis. So certain companies maintain it, certain companies may not maintain a separate module. They will maintain in the receivable module itself. Okay, Yogita already said good night. Thanks, Yogita. Good night. Okay, examination I already answered. Can we say that process modules are used by almost every industry? So there is no process module, right? I don't understand your question, Samriddhi. So I think I have answered all the questions. So as I said, read through the modules once again. Let me know if you have any questions. So we will connect back on day 3 to discuss the final leg of the chapter, basically on the reporting part. It's quite simple. We can quickly complete and focus on the examination related questions or any of your MCQ related questions. I forgot to say I have given MCQs. I hope you are answering it. If you have any doubts on those questions, definitely we can discuss in the last day. Thank you so much, students. Thanks for allowing me to take this extended time. Have a good night. We'll connect on day 3. Thank you. Concluded.